The world feels more unpredictable than ever right now, doesn't it? Geopolitical tensions, economic uncertainty. It's just a lot. And yet, if you look at Wall Street, it seems like they're having the time of their lives. So that's the paradox we're going to unpack today. It's a question that just doesn't seem to make sense. While so many of us are feeling the pressure, the biggest banks are reporting some of their best numbers in decades. I mean, how is that even possible? Well, what if the chaos isn't actually a problem for them? What if it's the entire point? And that's it, right there. That's the core idea. For today's top banks, volatility isn't something you just try to survive. It's something you harness. So we're going to look at three of them, Bank of America, Morgan Stanley, and PNC, to see exactly how they're turning all this global uncertainty into record-breaking profits. Okay, let's start with Exhibit A, Bank of America. They just put on an absolute masterclass in how to profit directly from a volatile world. The numbers they just reported are, and I'm not exaggerating, stunning. First up, their net income for just the first quarter, a massive $8.6 billion. Now that's a 17% jump from last year, a huge increase. But hold on, that's not even the most impressive part. Check this out, their earnings per share. At $1.11, it is the highest EPS Bank of America has seen in nearly 20 years. We're talking like since the flip phone era. So the big question is, where did all this money come from? And here is the MVP of the quarter, equities trading. It was up a staggering 30%, its best performance in 15 years. And the sources are crystal clear on this. This surge was fueled directly by market volatility. When the world gets shaky, trading volumes just spike, and Bank of America was perfectly positioned to cash in. Another huge factor was their net interest income, or NII. Now, this is really the bread and butter of banking, the money they make on the spread between what they charge for loans and what they pay for deposits. BofA's NII grew a really healthy 9% to almost $16 billion. That just shows how solid their core business is. So what you gotta understand is that this wasn't just some lucky break. No way. Bank of America spent years and years investing in its digital infrastructure, building this massive client network to handle exactly this kind of moment. And that patience, well, it just paid off in a huge way. Okay, so let's move on to our next case and see how this all builds. If Bank of America profited from the chaos itself, Morgan Stanley profited from the consequence of that chaos, money in motion. Because when the world gets weird, people and institutions move their assets, and Morgan Stanley was right there to catch them. And oh boy, did they catch them. They reported a certified record quarter, over $20 billion in revenue, up 16%. Just look at this breakdown. Wealth management alone brought in a record $8.5 billion. And get this, they attracted $118 billion in net new assets. That is a tidal wave of cash. And this right here, this just shows you how much they're dominating right now. In fixed income trading, an area where they are always compared to their chief rival, Goldman Sachs, Morgan Stanley posted a 29% gain, while Goldman actually had a surprise miss. I mean, they are firing on all cylinders. Their CEO, Ted Pick, he summed it up perfectly, calling it a higher plane of operating performance. You can just feel the confidence, almost a swagger coming from the firm right now. But if you dig just a little bit deeper into their report, you find a more complex story. Because buried inside the spectacular report were $188 million in severance charges. It's one of the oldest tricks in the book, right? Hide the bad news about layoffs inside a blowout quarter. And that massive influx of wealth, well, it now puts them in a direct dogfight with the new wave of fintech platforms like Robinhood and SoFi, who are all fighting for those same clients. And that brings us to our final and maybe the most fascinating case study of them all, PNC. On the surface, their results looked, well, a little confusing. But underneath it all, they were making a very, very clever move. A kind of Trojan horse strategy for the future of banking. See what I mean? They beat expectations on earnings per share, which is great, but they actually missed on revenue. So how in the world could anyone call this a strong report? Well, the answer isn't just in the numbers they posted, but in a company they bought. Now, the immediate driver was a $4.1 billion acquisition of a bank called First Bank, and that boosted their loan and deposit numbers. Okay, that explains the solid underlying performance.
But that's not the real story, not even close. The real story is about what First Bank actually was.
See, First Bank wasn't just any old regional bank. During the pandemic, it completely overhauled its core technology, making it one of the most digitally modern banks of its size. So PNC didn't just buy a balance sheet, they bought its state-of-the-art digital engine. And now they are literally transplanting that digital DNA into their own systems. This wasn't just an acquisition, it was a fintech infrastructure play in disguise. So let's connect all the dots. We've seen 3 different banks, 3 stellar reports, but they all point to the same really powerful conclusion about who the real winner is in this chaotic new world. Here it is, the playbook laid bare. Bank of America used its existing robust digital infrastructure to profit directly from market volatility. Morgan Stanley used its powerful wealth management platform to capture all the assets that chaos set in motion. And PNC, in what might be the cleverest move of all, didn't just play the current game. It went out and bought the future-proof technology to win the next one. Ultimately, what this all means is that the game has fundamentally changed. For decades, winning on Wall Street was about having the smartest traders in the room. But today, it's about having the most powerful, the most resilient, and the most modern digital infrastructure. Technology is the new trading floor. And that leaves us with one final, pretty important question. Because look, this isn't just about Wall Street giants. This technological shift is happening everywhere, at every level of the financial system. It really makes you wonder, when the next wave of chaos hits, is your bank built for the past, or is it ready for the future?